Booyah! Now we've covered the qualifying child rules in detail. So now let's move into qualifying relative rules and compare both using the two mnemonics, NARCS for qualifying child and closer for qualifying relative. Remember, to claim someone as a qualifying child, they cannot be independent. They must rely on the taxpayer for most of their support. To claim someone as a qualifying relative, the relationship can be a bit borderline, right? But we need to show the person is financially or relationally close to the taxpayer, all right? So we'll still use Linda Larper throughout. Sometimes her children may qualify as a qualifying child. Other times a family member may only meet qualifying relative rules. So drilling into our closer mnemonic, the C is going to be our citizen/residency test. All right, so the first test for a qualifying relative is, again, that citizen test. So to be claimed, a person must be one of the following: a U.S. citizen or a U.S. resident or a resident of Mexico or Canada. All right, so if Linda's mother, who lives in Canada, moves in with her and meets all of the other tests, she can qualify as a qualifying relative. But if her cousin, who lives in France, tries to qualify, it's not going to be allowed. Think of it as if they call the US, Mexico, or Canada home, you can claim them. Okay, so the L in closer lives with the taxpayer, if not related. What's going on? My name is Joey, and I'm the founder of Universal CPA Review. You're probably here because you're ready to pass the CPA exams once and for all so that you can advance in your career and move on with your life. Let me be the first to tell you that I've been there and I feel your pain. But I'm also here to tell you that the CPA exam doesn't have to feel like such a maze, and there is a path to a passing score. So what are you waiting for? Don't waste any more time. Commit to the process because it will pay off. In my opinion, I say let's knock out the CPA exams once and for all. A non-relative must live with the taxpayer for the entire year to qualify. So if Linda lets a family friend stay with her from January through December, pays their living expenses, and the arrangement is legal, that person could be a qualifying relative. All right, so foster parents and cousins are not considered immediate qualifying relatives, so they must meet the full year residency requirement. So the L in closer reminds us that if there's no family tie, the IRS wants a household tie. All right, so the O, only limited income. To be a qualifying relative, the person must have very little taxable income. All right, so we have a threshold to keep in mind. This is a number that is changing most years, so be mindful of what the amount is for this specific year. All right, so this is going to include wages, taxable interest, taxable unemployment, and dividends. What is it not going to include? Social Security, if it's below the taxable threshold. It's not going to include tax-exempt bond interest or scholarships used for tuition and books. So taking a look at an example, Linda's mother receives $4,500 in taxable pension income. This is under the limit, so it is going to allow her to qualify as a relative. But Linda's adult brother earns $8,000 landscaping. This is over the limit, so this is not going to allow her brother to qualify as a relative. All right, so think of it like this. Only income that goes into the IRS tax buckets will matter. The S in closer stands for the support test. This one is huge and tested constantly. All right, so to claim someone as a qualifying relative, taxpayers must provide more than 50% of the person's total support. So what is support? Support includes housing, food, clothing, medical care, education, and transportation. So if Linda's mother pays 55% of her own expenses, she's not a qualifying relative, even if her income is below the limit. All right, so support is about who keeps them afloat financially. The E in closer is going to stand for excludes joint returns. All right, so married dependents filing jointly with their spouse are generally not going to be claimed as a dependent by Linda, unless the couple would owe no tax even if they filed separately. All right, so this is an exception that allows dependents who file jointly to just claim a refund like withholdings. And this is a common trap question. So remember, if they file jointly, they're excluded, unless nobody owes tax anyway. The R in closer stands for the relationship test. Even though closer already includes household rules, relationships can replace the residency requirement if the person is related closely enough. So qualifying relatives include parents, grandparents, children and grandchildren that are not qualifying children, brothers, sisters, nieces, nephews, in-laws, yes, in-laws. Step relations count too. All right, so who's not going to be included? Cousins and foster parents. Even a newborn child born on December 31st counts as a relative all year. So think, the IRS cares about close family ties. The closer the relationship, the more likely it is that they qualify. Okay, so now let's talk about something referred to as multiple support agreements. Sometimes multiple family members contribute support, but no single person provides more than 50%. What are we going to do, and who gets to claim the dependent? So the person that claims the dependent is going to need to meet certain requirements. The first requirement is that the contributors must collectively, in fact, provide more than 50% support. The chosen taxpayer must provide more than 10% of the support. They must meet the full qualifying relative rules, and they must file this Form 2120, which is multiple support declarations. All right, so this rule often applies when adult siblings help support of an elderly parent, and support is split among multiple households. Okay, so while this can be considered a more miscellaneous concept that is infrequently tested on the exam, the difference in passing and failing this exam is in the details. So we went ahead and created a mental map for multiple support agreements for you to remember this easily. So this is a very simple 3-step mental map that breaks down multiple support agreements in 3 easy steps. All right, so the whole idea here is that there are multiple people supporting this person, but only one can claim the person as a dependent on their tax return and receive the tax benefits. So who gets chosen for this benefit? And the IRS is simplifying this for you by saying, in order to claim this person as a dependent, you must first meet 3 tests. So the first test that needs to be met is the greater than 50% of collective income test. And all that's saying is that the group collectively must provide greater than 50% of the dependent's total support. All right, so if Linda made $10,000 from her part-time job and still received support from family and friends, she can only be claimed as a dependent if the total support is collectively over $5,000, right? Greater than 50%. So step 2 is our second test, which is the 10% of total support test. All right, so now that we have determined that more than 50% of the dependent's support is collectively provided by others, we must now move into step 2 and narrow some of our focus on the people supporting her, because they're the ones that are potentially claiming Linda as their dependent and receiving the tax benefits on their tax return. So in order for one of these people to claim Linda, they must provide more than 10% of the group's total support. So in this case, if they're providing $5,000 as a group to Linda, that person must provide $501 or more to move into step 3. Right, must be greater than 10%. So now in step 3 is our third test. In order to claim Linda as a dependent, they must also meet the qualifying relative criteria. Hint, hint, all items within the closer mnemonic. Okay, so let's take a deeper dive by looking at an example. Okay, so in this example, we see that Linda Larper is 82 years old and has no taxable income. She does not live with any of the supporters. She lives in her own apartment and received financial support in the following amounts. Jamie, her daughter, gave her $3,600 in support. Her nephew Nick provided $800, and her friend Sarah provided $4,300. Okay, so what's required is determining which of these people can claim Linda as a dependent, if any. All right, so thinking about our mental map, what's step 1? Step 1 is the 50% of total collective income test. So we must first determine if the total support, which is the sum of all of the contributors' amounts, is greater than over 50% of the total income. All right, because Linda has no taxable income, the $8,700 in total support is going to exceed 50%, right? Because it's 100%. So now moving on to step 2, which is our second test. That's the 10% of total support test. All right, so if we're looking at the numbers, we see that Jamie provided $3,600. Does that make up more than 10% of the total support? Yes, it does, because $3,600 out of $8,700 in total support gives her 41% of the total support. All right, so what about Nick? The answer here is no, because Nick only provided $800, which is not more than 10% of the $8,700 total supports provided. All right, and finally, Sarah. She also meets the 10% test because $4,600 in contributions exceed more than 10% of the $8,700 provided. All right, that's 49%. Okay, so we've eliminated Nick. It's down to Jamie and Sarah. Okay, and only Jamie is going to end up qualifying because only Jamie meets all of the requirements within our closer mnemonic. All right, so Sarah, her friend, does not meet the criteria within this mnemonic because she fails the relationship test, right? She's not a relative, and Linda didn't live with her. Okay, so between Jamie, Nick, and Sarah, only Jamie can claim Linda as a dependent on her tax return.